Hello. Excuse me. Great start, isn't it? Hello, John, coming to you. Hope you're having a good morning so far. It's a rainy morning here in San Diego. We really need this rain, but it's come a lot later this year than some years. So yeah, it's already the second week of March. We're getting rain all day today. We're probably going to get some rain later this week over the weekend, which again, we really need, but it is kind of late in the year for us to be getting most of our rain. We usually get it earlier, but I'm driving in, as you can tell, got the car going, the video in the clamp. So going to talk to you about living benefits this morning, talking about different types of life insurance and a feature that about 15 of the 900, yes, 900 life insurance companies in America has, which is called living benefits. I've talked about this before. I talk about it on Facebook all the time. It's one of the hallmarks of the company that I work with. And one of the two reasons I'm actually back in the financial services business, when I took a look at this company, Five Rings Financial, I knew we did what we call indexed accounts that are up and sideways savings and retirement vehicles, because I'd already learned about those. I did not know the first thing. I thought I knew about finances, especially the safe money, value investing, conservative side. That's more my niche. I'm not into some of the really aggressive strategies. They just don't work for me. And I mean, I try them every now and then, and I've done okay. But generally, I like my money being safe. I joke, I took all my risk as an explosive ordnance disposal officer, and other than on rainy days like today, riding my motorcycle. So I want my money to be there when I need it. So, that's the indexed accounts. I'll be talking to a friend of a friend, another EOD tech later today about those because of what's going on in the market. But day in and day out, no matter what the market is doing, I want to talk to people about living benefits. I mean, I want to talk to them about indexed accounts too, but we really feel that if you can get them, you should have living benefits. There are some medical disqualifications because they're a blend of life insurance and, medical emergency. But I'll talk about how that works in just a minute. But, we don't realize it. We insure things that are valuable to us, like the phone that I have. Now, it's not insured because it's kind of an old phone, but some people buy insurance on their phones. I definitely have insurance on this car that I'm driving. We have homeowners insurance. Our daughter who rents has renter's insurance. We have health insurance. Some people have insurance on their pets for vet bills and on their appliances, right? We have all kinds of insurance out there. But what we don't insure, or at least to probably the proper level, is us. And I don't mean us if we die. Traditional life insurance has been great at that for hundreds of years. So if you died traumatically or died suddenly, yes, the life insurance, if you have the proper types and the proper amount, is meant to do things like replace 10 years of income, or educate your children, and pay off the house, make it where your spouse, if he or she wants to remarry, they can remarry for love. They don't have to rush out and get remarried. Now, that doesn't happen as much as it used to, but, people are in a bad way. I mean, you still see it. I hate seeing it. I'll just be honest. You see a GoFundMe for somebody's funeral, right? And I understand funerals are not cheap. Don't get me wrong. Funerals are expensive, especially if they're unexpected. Even if they are expected, you don't want to pay all that money out, but you can plan for them. But what if, I had a friend whose daughter died recently, her stepdaughter died recently. They weren't planning on having a funeral for her. So, but if you're doing a GoFundMe for a funeral and, you're someone who your family or children or loved ones count on your income for day-to-day living expenses, and something happens and you do a GoFundMe for the funeral, well, what's going to happen the 1st of April or the 1st of May or the 1st of June, right? And then things really start happening bad. People sell cars for pennies on the dollar because they can't make the payments, or they just give them back and they lose their homes, they become homeless, or they have to move in, with family. And that's, so that's a real shame. But what we don't think about is, okay, if I died and my wife got hundreds of thousands of dollars, that'd be great for her, at least, right? Not great for me because I'm dead. But what if I get sick? What if, somebody runs a red light while I'm trying to drive safely, not staring at the camera, and somebody runs a red light and hits me, but because the car is well made and it has airbags and a good seatbelt and a collapsing steering wheel, I just get hurt real bad. I don't die. Well, if you had traditional death-only life insurance, no matter what type it is, term, permanent, whole life, index universal life, variable life, there are a gazillion different types, right? We only think about term and whole life. There are actually a lot more than that. That'd be a whole separate video, and also the different uses of them. But when you can't work, most people have a disability policy from work, or they have workers' comp, but there's two problems with those. First off, workers' comp only pays if you get hurt on the job. And, other than twisting my ankle or, having a paper cut, I'm not real likely to get hurt at work. Yeah, I go up and down stairs, but there's railing and they have safety rubber matting on them and everything. I don't do a physically demanding job. I'm not diving for the Navy anymore, jumping out of stuff, blowing stuff up. It was all kind of cool and fun. Wish I could kind of still do it, but you see what I'm saying? And then the disability policy at work, first off, I've got to be out of work, I think a couple weeks to even qualify for it. Then it only pays like a third or half my salary, and it doesn't really pay for that long. So if I'm really out of work for months, it probably would stop paying. So, there are some workplace benefits that are better than that. Like some companies have a program through a company called Aflac. I don't represent Aflac. I have a lot of friends who do. We actually have some agents at Five Rings that are dual, and they work with us and represent Aflac, which I think is cool. Because I've heard really good things about Aflac plans, and I would definitely say if you have one through work, look at it, take advantage of it. When I incorporate, I will probably buy that as a benefit for the key employees of my corporation, basically myself. So I like things like that, but even that, they have one program that's amazing. I don't know all the specifics of it, so I won't go into it. If you're an Aflac agent and you're watching this, or maybe I'll reach out to some of my Five Rings partners that are Aflac agents and see if they have a video on that. I'd love to post that either in the description or the comments, because again, I'm not going to act like I'm an expert on it, because I'm not appointed with them. I haven't done product training on their product, so I don't want to misrepresent it. But I want to talk about our living benefits. I've gone for 8 minutes and I've just kind of touched on living benefits. So let me talk to you about what living benefits are. As I mentioned, we're going through life and something happens to us, right? Our doctors, I always joke when I do this presentation live, that our doctors have been practicing medicine long enough, right? That term, practice medicine. They've practiced medicine long enough that they've gotten good at it. Doom, right? I know it's Tuesday, bad dad joke day, and trolls on Facebook. But our doctors have gotten good at medicine, and a lot of things that killed people when I was younger, back in the 70s and 80s, a lot of people died from things that nowadays are just negative medical life events. And, the great thing is they can patch us up, get us back in the game. But the problem with that is now, you're in a situation where you have all these medical bills. You might not be able to work for 3 to 6 months. You might be going through, they've got all kinds of chemo drugs now, but if you know anybody that's taken chemo, or if you've taken chemo, it really slams you. I mean, you get sick, you get nauseous. Some people get brain fog. Some people get body aches. It definitely wears you out. And then you add radiation on top of that, or you have a stroke and you've got to do occupational therapy and physical therapy for a number of months just to function, right? There are all kinds of things like that happen. And, we go through life and we count on our income. So what living benefits does is living benefits gives you the opportunity, not the requirement, but the opportunity to turn on a stream of money or a lump sum of money from your life insurance. So it's not health insurance. It's not a separate accidental death, dismemberment type policy. It is actually a feature in a modern life insurance policy, like I said, from these top 15 companies. So, what it does is it accelerates. The actual name of it is an accelerated benefit rider, or ABR. You don't have to remember that. Just remember living benefits, right? ABR is what we call it in the industry. So it's truly what it says. The companies looked at it, and these 15 companies, 2 or 3 of them actually got started, and then other companies are saying this is the right thing to do and it's competitive in the marketplace. But they said if we have to have a reserve, so this is the nuts and bolts of how living benefits works, and then I'll talk about how you qualify, what qualifying events trigger them. So the company said, if let's just say it was my policy. So John and I have a $500,000 term life insurance policy, or permanent. I wish I could afford a $500,000 permanent policy. That'd be pretty expensive. It'd be great. But so let's say I have a $500,000 life insurance policy. If the company says if John gets hit by a bus, or if he just doesn't wake up tomorrow morning, we will have to pay $500,000 to John and his family. So a life insurance company, every night when they go to bed, they know tomorrow morning they could be paying out a significant portion of money in death benefits. They know they do that. They're legally required to be able to do that. They're very heavily regulated on their reserves to be able to do that. Well, some of the leaders of these first 2 or 3 companies, I've represented all of them. One of them we're no longer partnering with. They decided to go a different direction in their marketing strategy. But we still partner with one of the other pioneers of living benefits, and they're the 7th largest life insurance company in America now. They're growing every single year, even during COVID. So the company said, if we know we have to pay John $500,000, or Jeannie, my wife, $500,000 if something happens to John and he dies, what if he only gets sick and he does not die? The doctors had practiced what he gets sick on, and they heal him, patch him up. But John, what the company saw happening was we would have so much financial stress on top of the medical emergency that Jeannie and I would likely stop paying my life insurance premium, and then the account would go away. And the company was like, that's not the right thing to do. So they went to their mathematicians in the industry, they're called actuaries, and they said, if these certain things happen, he has a stroke, he has cancer, he has a critical injury or critical accident, he can't do the functions of life that we all take for granted, we call them the activities of daily living, or ADLs, could we give John the option to accelerate some of his death benefit to get through this event, get well, and get back with his life? And so the mathematicians crunched it. They came up with all these numbers. They're really smart guys and gals. They're the ones that like doing math, love spreadsheets, have supercomputers helping them. And they said, for these certain things, we can accelerate part of your death benefit. So how does that work? Well, let's start with the biggies. Let's say you go to the doctor and you have that conversation none of us ever want to have, right? A couple friends of mine have just had MRIs and CAT scans checking out tumors, right? Well, they go back to the doctor. Let's hope this isn't what happened. It's not what we're praying for. But you go back to the doctor and they say, John, I'm really sorry to tell you, but you've got 2 years to live. You have a terminal illness. Well, our company says, depending on the severity of that terminal illness, you can accelerate up to 90% of your living benefit. So let's go back to that $500,000 policy I have. We would send them a letter from the doctor saying, I have a terminal illness, and they would say, John, would you like up to $450,000? I don't have to take it all at once. I don't have to take it all. But what if I did? I could take that money, and instead of Jeannie having to file a death claim when I died in the next 18 months to 2 years, probably, she and I could set everything up together. We could set up a trust. We could set up, annuities or accounts to pay off the house, to help our daughters out, to help charity out. I could fund the charity with some of that money while I'm still alive. I could see it go to work. I could do things for children. I could do things for family. And, we saw this happen. We had a couple up in Colorado that the wife was a breast cancer survivor, so she couldn't get living benefits, but she really wanted her husband to get them. And he said, honey, I'm healthy. I work out all the time. I'm a triathlete. We've got these 2 young kids we're chasing around. Let's get you healthy. Let's let everything get back to normal, and then I'll worry about it. Well, ladies, what do you do when we say that? You stay on us, right? And thank you for doing it, because she said, honey, I really want you to have living benefits. It would be better for me and the girls. So they got $1 million plan. They had the plan in place for about 18 months, and they were paying for it every single month. It was term, $1 million. Well, then one weekend, he didn't have 1, he didn't have 2, he had 16 seizures. Well, after those seizures, they went to the doctor and they said, unfortunately, not only do you have brain cancer, you have the worst type. It's called GBM. It's terrible, and it is terminal. So they, through the tears, they got a hold of my fellow agents up there in Colorado. They were able to get a check. I've seen a copy of it. It's $864,000. So let's think about it. 18 months of premiums, $864,000. So yes, they took aggressive treatment. They did the treatment at their hospital up in Colorado. They went after other types of treatment, experimental treatment, because they could afford to pay for them. Unfortunately, he did pass away, but before he passed away, he was able to make sure the house would be paid off, make sure both those girls were going to be educated, and take a couple trips with his family while he was still healthy enough to do it. That's the power of true life insurance with living benefits. So that's terminal. The second way it pays is if you have what's called a critical injury or illness. This is a major event. It could be a type of cancer. Definitely 2 of the biggies are heart attacks and strokes. And these are the kind of events. And then a really bad accident that changes your life permanently. Loss of limbs, 3rd-degree burns over a certain percentage of your body, loss of sight. Anything like that happens could be a triggering condition. And if you had one of these events, the idea is to be able to adjust things in your life that you could go on living productively and happily, but you wouldn't have to worry about finances while you're doing that. The worst thing possible would be to have a heart attack or a stroke, and then you rush back to work and you have another one, and then that kills you. And you see that happening sometimes, unfortunately. So in this case, you accelerate up to 75%. So in the case of the $500,000 policy I'm using as an example, that would be up to $375,000. Again, you don't have to take all of it. We see a lot of people, figuring out what 6 months or a year worth of living expenses and mortgage payments would be, how much maybe modifications to their house or a vehicle, say I need a vehicle that I can drive and operate with just my hands, or I need a handicap van. You take the amount you need for that. Again, you can take the full 75% if offered, but you don't have to. It's flexible and you get to pick. So that's terminal illness rider. That's the critical injury and illness rider. The third one is a game changer when it comes to long-term finances. So let's say you have something happen and you've gotten older, maybe I can't feed myself anymore. I can't cook safely, and I can't get up and go to the bathroom by myself. Now, Jeannie did not marry me to change my diaper, right? She's changed her daughter's diapers, but she did not sign up to change mine. So, I need extra care, or I need to move into something like the Veterans Home down in Chula Vista. Well, the problem with that is that could start at about $8,000 to $10,000 a month, or it could even be $15,000 or $20,000 a month, depending on the level of care I need. Like if I have something like Alzheimer's or dementia, that could easily be close to $20,000 a month. Well, maybe the first month we wipe out our savings and our checking account. The second month we start dipping into retirement accounts. Over the next few months, maybe the next year and a half, we wipe out all of our retirement accounts. We start dipping into our home equity. And, I might live 4 years in that condition. The national average is somewhere between 3 and 4 years. Well, think about it. What would $20,000 a month over that long a period do to most people's finances? They'd wipe out their retirement accounts. They'd wipe out most of their home equity. They might even sell their house or take a reverse mortgage out on their house. And then what happens more and more often, especially nowadays, is one member of the family, usually the husband, because let's just face it, we don't take as good a care of ourselves. Most of us die before our wives. Most of us get sick before our wives. More and more ladies are living their lives, spending all this money, keeping a loved one alive, either a parent or a spouse, and then they live the last 4 to 5 years of their life right above the poverty line because they've spent all their retirement and they've lost their home equity trying to keep this other spouse taken care of. This is terrible, and it can be fixed with what's called the chronic injury or illness rider on a living benefits life insurance policy. What that does is it pays 2% of the value of the face value, but it pays it every single month. So in a $500,000 plan, you could get up to $10,000 every single month for 48 months. Remember I said my life expectancy would probably be 3 to 4 years. So maybe it wouldn't pay for everything if I only had a $500,000 policy, but it would be a lot better than not, right? How do you get these? Well, because they are part of life insurance policies, you do have to qualify as if it's a life insurance policy. But actually, that is easier than a medical insurance policy. And in most cases, you don't even need a physical exam. There's, a questionnaire with a lot of medical questions, a lot of terms that I can barely pronounce. And I always say, if I mispronounce it and neither one of us knows what it means, the answer is no, right? There are a lot of diseases on there most of us never catch, thankfully. Got to have your height and weight, picture your driver's license. Usually that's how I get your height and weight. In the last 3 or 4 years, only one of my clients has needed what we call a pyramid. That's a mini physical that we pay for. They just come in, they did it last week for them, actually a week ago. They just ask you the same questions, do a quick blood pressure check, temperature, you pee in a cup. They may or may not take any blood, but that has happened once in the last 3 years for a client. More and more, we're just doing everything automatically. Their database is out there, we can query. If we have to, we send a note to your doctor. But it's really easy. A lot of these clients are getting their living benefits plan set up in 2 days. In the description, there will be a link to a form that you can submit some information that is only to me. I will not sell that information. So if you'd like some more information about living benefits, I'd love to get that to you and share with you how easy these are to get and how important they can be for your family. Have a great day, everyone.